Hey guys, what's up? Okay. So I hope you guys like the video that I put out on Thursday. The video on Thursday was more on the lines of, how do you understand the stock market before actually getting into it? We were talking about the different tools that we use to evaluate the stock market, right? Now, I'll tell you what's happening. A lot of people are asking me this question that, okay, Shashank, you're doing this back to basics course on the stock market. Can you also help us understand what index funds are? Or can you help us understand what mutual funds are? What ETFs are? Okay. And there's a lot of ETFs as well. Now, a lot of people who have just entered the stock market right now have no idea or no clue what an ETF is or what a mutual fund is and stuff like that. And they want to understand this in a more simplified and better way. So what I've decided to do is, along with this basics of stock market that I'm doing, parallelly I'll also start basics to mutual funds as well, and I'll just do one full course on mutual fund as well from start to end. Okay, and I'll teach everyone on different type of mutual funds, what benefits you can get, etc, etc. And then I'll do something else on ETF after that. Okay, so today's episode, on Saturday, I usually put out personal finance, but today's episode is going to be only about mutual funds. I'm only going to talk basic about mutual funds. Today's episode is only about what a mutual fund is. Okay, what are the advantages of investing in a mutual fund? Okay, and then in the course of the next few videos, I'm going to talk about the different type of funds that are there, whether the different type of tricks you can use to reduce your money that you spend on mutual funds, how to make long-term growth on a mutual fund, how to evaluate whether SIP is good or whether a lump sum is good, and how do you actually build that over a period of time, how to use mutual funds for tax benefits as well. So in the next few part of videos, I'm going to talk about that and some important terminologies like AUM, expense ratio, etc. So today's video is just a simple one. It's going to be about what a mutual fund is. So for all the people who've seen a mutual fund or know what a mutual fund is, then this video might not be damn good for you. This is for people who have no idea what a mutual fund is. Okay, so let's look at that now. Okay, so what I'm going to do is I've opened up a few links for you guys. So I'm quickly going to go to those links and show you what a mutual fund is. So a very simple graphic here. Okay, now what is a mutual fund? Okay, as the name suggests, it's a fund created by a lot of people. Now, basically, if you look at this, right, investors, which are people like me and you, okay, investors start pooling in their money. Okay, they all take the money and start pooling in their money. Pooling in their money basically means कि मैं 10 रुपए डालता हूँ, you put another 100 rupees, you put another 5,000 rupees, etc, etc. We will all combine it and then start investing it together. So this is very similar. For example, if you have a local community and someone says, you know what, there's a finance expert in that community, let's all give him our money and let him manage it, right? And he takes a small fee for managing. That's exactly how a mutual fund works. So a lot of investors come together, pool their money, and give it to this person called as a fund manager. A fund manager is no one but who manages your stocks and takes care of all these things. Okay. Now the fund manager is like, okay, cool. You know what? I have so much money with me. Okay. By the way, there's so much money with me. This entire pool of money is also known as AUM, which is assets under management. So all this money that he gets are considered as assets. So this is also called assets under management. So now what happens is all the investors come and give this fund manager pesa. Okay, now the fund manager has so much pesa in his bank account that he's like, oh shit, okay, now I've got say 100 crores I have to invest now. This is also AUM, right? I have 100 crores that I have to invest. As a fund manager, he's like, okay, cool, now I need to find which are the good stocks, how much to put in each stock, okay, how much to diversify in each stock. That and all the fund manager has to actually think about. He'll have a team of analysts coming and telling him, you know what, fund manager, I think this stock is damn good because its fundamentals are good. This is a good momentum play because this is good. The fundamentals of this stock is damn good for value investing, growth investing, etc, etc. This is good. So the fund manager is the person who will manage your funds. Very simple as that. Okay, now he will choose what securities to invest in. Chalo dal dega. Okay, he'll be like, okay, cool, I like this HDFC bank, I'm going to put 30 crores into HDFC bank and sit down, put another 10 crores here, 10 crores there, etc, 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 etc. They'll put some money in. Okay, now what happens is, over a period of time, the fund starts generating returns, right? The stock that he invests in will start going up. Now, not all of them will go up, some of them will go up, but in a ratio that it is profitable for the end investor, right? The main idea behind a mutual fund is that experts are managing it, so it should at least beat the benchmark index. At least minimum itna to beat karo. If Sensex went up by 20% in a year, you have to at least beat it by 21%, like at least become 21, 22. Okay, so now securities generate return. Okay, now the return, once all the return is done, the investors are like, chalo merko abhi, I gave you all the money, abhi merko tune 20% return diya, so give it back to me. So this is the basic sense of how a mutual fund works. Obviously there's more technicalities, it's not that simple. Now I'll tell you what are the important things in this. Okay, important things are, now there's a fund manager. Now, who's the most important person in a mutual fund? The most important person in a mutual fund is the fund manager, because he is the guy who takes the responsibility of managing not only your funds but पूरा दुनिया का funds. और इतना लोग इंडिया में है जो putting the funds inside. His sole responsibility. There's one guy who has to manage maybe 10,000 crores, 15,000 crores, 20,000 crores worth of investment. So obviously that guy's job is not a very easy job, because everything he does is in the public knowledge. Everyone can see what he's doing, and you're always under the limelight, right? You're always in that scrutiny. Oh shit, this guy invested there, this guy invested here. Is it good or is it bad? And if he doesn't give returns, and everything is open, right? ऐसा नहीं कि काम कर रहा हूँ मैं job में, and then suddenly I don't do one Excel, I wait for 2-3 days and they'll be like, yeah, cool, it's okay, no one will understand, no one will find out. But here that's not the case, right? If I do something here, immediately if I don't give returns, I will come to in the public eye, and the public eye will be like, dude, where's my returns, where's my paisa, right? 21%, 20%, 15%, I want it. And if that does not happen, the fund manager will get fired. So the most important person in the mutual fund is the fund manager. And you have to do research about the fund manager. Don't just go and find a mutual fund that gives you good returns. Crystal rating acha hai, very good. Oh, okay. The amount of money that he's managing is great. How much he's giving returns in the last 5 years is all fine. Okay, good. I like this mutual fund, I'm going to invest. Don't think about it from that perspective. What if the mutual fund manager has just changed? What if a new mutual fund manager has come and this guy is slightly more aggressive than the older guy, right? He might take a risky play and it might be beneficial, but might also create an issue. Okay. So this is one very important factor in this loop. Fund manager is the most important person you need to figure out. Okay. Who's the fund manager? Is he good? Go find his Janam Kundli, find his track record, and if he's good or bad. Okay. Next, the fund manager will show you what securities he's investing in. You can actually look at all the securities that he's investing in, and once you look at it, you can take a call whether this is good or whether this is bad. Okay, and if it suits your style. Now after that, he generates returns, and then that return gets passed down to the investors. But here there is something called as an expense ratio. So here what happens is, obviously free mein koi karta hai kya? Nobody does anything for free, right? So these people are like, you know what, I'm pooling everyone's money, I'll give you your returns, but in that, for me doing so much work and effort for you guys, mere ko thoda paisa de do, right? This is the expense. Now different funds have different expenses, right? Different funds have minimum ticket size different. So now this is the basic concept of a mutual fund. Then what happened, the finance experts in the world said, chalo, हम लोग ने कॉमन मैन को थोड़ा कंफ्यूज कर दिया. वी सेड वील इनिशिएट दिस थिंग अबाउट अ म्यूचुअल फंड. ऑलरेडी हाफ द पीपल गॉट कंफ्यूज्ड. देन दे सेड, व्हाट, एक म्यूचुअल फंड से मजा नहीं आया, लेट्स मेक अनदर म्यूचुअल फंड, लेट्स कॉल इट लार्ज कैप फंड, let's make a mid cap fund, let's make a small cap fund, let's make an ELSS fund, let's make a hybrid of this and that, let's make a large cap plus mid cap fund. ऐसा करते करते they've made more than 50 to 20 different type of funds. Debt fund, ये fund. Now कुछ भी होता है उसका fund बना देते. Get it? Any sector, oh, sectoral funds. Oh, index is doing well, let's get an index fund. Okay, so anything that does well, okay, people are combining it, putting it together and saying, chalo, abhi iska naya fund bana hai, anyone wants to invest, come here, put the money inside. So mutual fund is not just one type. The concept you understood, right? Concept is a lot of people pooling money to invest in a particular security or a type of security to get some kind of return. That is the concept. But concept से थोड़ा आगे जाके पब्लिक ने बहुत सारा म्यूचुअल फंड बना दिया, विच इज़ वेरी 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 कंफ्यूजिंग. दैट इज़ वाई अ लॉट ऑफ पीपल इन इंडिया get confused saying that I know what mutual fund is, but I don't know where to start because there's so many mutual funds. So don't worry, in the course of this episode, I'm going to go through each of the mutual funds and then tell you what is good, what is bad, what you don't even need to look at. Okay, they've even made a fund called contra fund and stuff like that. They made a fund which goes against the market. Kuch bhi bana hai, okay? But it's okay. Instruments are, every year there are at least 1 or 2 new financial instruments that are made, right? Few years ago we didn't know what REIT was. Now REIT came, InvIT came, right? New instrument. Now there's a very famous instrument that is doing really well in the States. If you guys just want a general knowledge, go check out this thing called SPAC, Special Purpose Acquisition Companies, SPAC it's called. So this new vehicle is coming out in US. Eventually India में भी आ जाएगा. But leave that. Understood about the concept of mutual fund is. Now let's look at the advantages. Okay, why is it good? Now again, I told you in the previous video that we have a lot of resources out there for free. So I'm not going to make some crazy deck and give it to you picking up from other sources. I'm going to show it from the free resources itself to save your time and my time so I can start giving out more value like this. Now, the first important advantage, let me zoom in if you can't see it. Okay, the first important advantage of a mutual fund is something known as a diversification. Diversification basically means, okay, a fund manager will invest that money into different stocks. Understood? Now, what happens here is, say for example, I only have 1,000 rupees to invest. Okay, now if you have 1,000 rupees to invest, what will you go buy? If you had to go buy in the stocks, what would you go buy? You would have to go buy something that is less than 1,000 rupees. You can't go buy, say, Reliance, which is more than 1,000 rupees. You can't buy HDFC Bank, more than 1,000 rupees. But the fund says, don't worry, okay, don't take tension. You can even put 500 rupees, or you give me that 1,000 rupees, okay? I will give you a unit, I will give you a part of this entire chunk, okay? So if I'm managing so much money, uska ek part mein nikal ke tere ko dunga worth 1,000 rupees, and whatever the return is of that 1,000 rupees, I'll give it to you. Okay, and then he goes and invested in 10, 15, 20 different stocks. Okay, so your 1,000 is now not dependent on one company, your 1,000 is now dependent on 20 companies. So you automatically you're diversifying your portfolio. Okay, diversification means don't put all eggs in one basket. Sab ek hi cheez mein mat dalo, thoda idhar, thoda udhar, you know, little here, little there. So if something falls down, no issues. Okay, one will fall, one will take it up. That's the logic. Okay. Second advantage, okay, is professional management. Now, I'll tell you who use this mutual fund. Okay, so for all the people who don't know how to do stock market, who don't know how to find a good stock, I don't know how to find a fundamentally good stock. I don't know how to find a growth stock. I don't know what a value stock is. मेरे को ये झंझट में पढ़ना भी नहीं है because I'm running my family business or I'm very busy at work. I don't have the time to sit and research what is the next big stock and क्या growth factor हो रहा है ये वो फलाना ढिमकाना. I don't know all this. I have no idea. But I'm saying, you know what, if I don't have any idea, let me not think too much. Let me just find one or two good mutual funds and just start putting an SIP into it or just start investing into it. Okay, SIP means systematic investment plan. Okay, systematic investment plan just basically means कि मैं हर महीना कुछ ना कुछ discipline करके हर महीना I'll keep investing something. So professional management is basically if you're not a professional, you don't have the time, you're like, I'll find a professional, I'll pay a small amount, but in the grand scheme of things, okay, if you keep your money for a longer period of time, that expense amount that they take is nothing. It's peanuts compared to the amount of returns you will make. So mutual funds are not bad. It's actually very, very, very good. Okay, depends on what fund you find, and I'll tell you how to find a good fund later on. Okay, so professional management is a very big advantage for all the people who have no idea about the stock market. Mutual fund is a very safe thing for you to do. Again, finding the mutual fund you don't know how to do, that I'll help you with. Okay, simplicity. Okay, simplicity. Why? Because all the information is available online. Everything's available online. Okay, so you can actually open a particular mutual fund, look at its historical return. Okay, it's very simple to invest, very simple to remove. I can invest today, T+2 में मेरे को credit में मिल जाएगा, and then I can remove the money, and then the money will come back to me in 2 days, right? So it's very easy for me to come in and go out of a mutual fund. That is that liquidity is what the next point is, right? What I was talking about. That if I want to sell, I can sell it right now. Imagine you buy a house and you have to take time to sell the house. Liquidity basically means how fast can I get the money out. So stocks are very liquid. Like I can buy today, sell tomorrow. Gold is also slightly liquid. I take that biscuit, go give it to Bima Jewelers or some big jeweler, they'll give me the money back. Okay, but if it's a land, if it's a house, it takes time. Okay, you have to find a broker. The broker will go find a house for you. So buyer, seller, matching. It'll take some 3-4 months to sell. So they're not liquid instruments. Okay, liquid instruments is something like a mutual fund, very liquid. Okay, now look at the cost assigned to it. Now, because you're not an expert, okay, and if you try to go invest in the stock market, there's a very high probability that you might fail. Okay, because you have no idea about the stock market. But if you give it to a professional manager who's saying that my entire my danda pani depends on me giving you some good returns in the future, what if I take a small percentage? Usually it's 1 to 2 to 3%. I've seen some people giving less than 1% also. Okay, so people take less than 1% also when it's a big amount. So I don't mind giving that cost to somebody and say, boss, you handle it. Merko ye janjat nahi chahiye. I don't want to understand what the stock market is. I'm giving it to you. You figure it out. Okay. Now there is something called expense ratio, which I will do a separate video on that. Okay. NAV, expense ratio, AUM. I will talk about all that. Now, tax efficiency. This is my favorite. Okay. I do this a lot, by the way. So every year, the government tells you that up on ATC, okay, ATC is section ATC in the tax rules. The government tells you that you can get up to 1.5 lakhs tax exemption. What is 1.5 lakhs tax? You know, people always keep saying this, but half the people won't know what it is, right? It basically says, the government says, if you're paying 10 lakhs in, say 10 lakhs in tax, government is saying, "Ek kaam karo, 1.5 lakhs, you go invest in this ATC." Okay, ATC में क्या क्या है उसमें invest कर up to 1.5 lakhs. That money I will cancel from your taxable income and you keep it for yourself. So the government is actually incentivizing you to keep, bhai, please go save and I will not take that money from your tax. If you don't save, then you give it to me in tax. So a smart individual will be like, dude, why should I give it? Like, let me save as much as possible for myself, and then jo bachta hai, let me give it to the government. So even government doesn't want you to give everything. The government wants you to save. Okay. So in mutual funds, there is one tax benefit. It is called ELSS fund, equity linked savings scheme. Okay, this is called ELSS fund. Gives great returns, by the way. I use it a lot. Now what this does is you can actually invest in a year 1.5 lakhs, which is completely tax free. Okay, your government will not take that money. The only problem here is that it has a lock-in period for 3 years. The government says, acha, you've done it for yourself, but 3 saal tak you can't touch that money. Okay, the returns also tax free. Okay, and it gives you beautiful market linked returns. So mine, I think it's been around 2.5 years or 2 years for my thing. It's already up by around 50% on a cumulative basis, right? 20% first year, 25% in the second year. So it's great. And I wouldn't get this kind of percent in the other schemes that are there. So I use ELSS a lot and I really like it. 3 years, it's okay, I'll wait. Okay. The next thing is that a lot of people think about when it comes to mutual funds is how to select, because there are so many types of mutual fund. इतना confused कर दिया है कि there's this type, that type. Don't worry, this I will come to this part. This is my responsibility to teach you what are the different type of mutual funds. But there are, see this low duration का एक fund बनाया, short term debt का एक fund बनाया. Then they're like we'll balanced fund भी बनाएंगे. Dude, I'm telling you, they have made so many funds. It is unbelievable, right? But you don't need to worry about that. You only need to know a small amount of funds to be happy in the stock market. The main advantage of this is that you can start with a small amount. Even at 500 rupees you can invest in a mutual fund. Okay, and you get the advantage of diversification into 100 stocks, right? So mutual fund is very good because you can start with 500. You can go, do whatever you want above 500. See, there are some funds apparently like Reliance Small Cap that let you start with 100 rupees, right? With 100 rupees you get the benefits of diversification, so that is good. Another benefit is automated investment, which is basically what the SIP is, right? SIP basically means if I schedule an SIP, SIP is a systematic investment plan. Okay, this is for people who have zero discipline, who want discipline in their life. They can say that, look, boss, I will tell my broker or I will tell a particular fund house that every month on the date of say first of every month, 1st Jan, 1st Feb, 1st March, 1st April, jo bhi hai, first of every month, you take 1,000 rupees from a bank account automatically, okay, and put it in the mutual fund that I select. So I select, okay, I select say this Axis Bank mutual fund. Every month on first, you take a pre-decided amount like $1,000, put it off in this bank account. Put it off in this mutual fund. So what happens is, बिना सोचे समझे मेरा savings हो रहा है, beautiful savings हो रहा है. So that is why it's good. And the last but not the least, it is very safe and transparent. Obviously, because I told you, right, every mutual fund house has to show what they're investing in, has to be very transparent about it. They also come under the SEBI rules. Now there's a new body set up called AMFI, which is AMFI. So they also do a lot in the mutual fund. So it's very safe. It comes under the SEBI purview, and SEBI purview keeps looking at it. The fund managers quality this. So what are the things that they have to disclose? They have to disclose the value of the stocks that they're investing in, the historical performance of this fund, the fund manager's qualifications. कोई useless आदमी को उठा के नहीं लगा सकते. You need a good qualified person, and the entire track records are also known. Okay, the net asset value. Again, I'm going to do a separate video on this because it's a little complicated. The net asset value of the fund is updated every single day. Got it? So these are some very important things. Other things not that much. Okay. Now, look at the disadvantages here. Okay. Now, cost obviously is an advantage because for people who don't know how to run a stock market, it is fine, right? Now, when it comes to a cost on a mutual fund, I told you, right, there's a cost of exit load. There's a cost called expense ratio and exit load, which I will come to in a separate thing, right? Now, if you sell some funds also say this, right? Funds will make money if they can take your money and invest for a long period of time, correct? But some funds are saying that, you know what, Shashank, you put in 1,000 rupees, but if you remove it before 365 days, okay, I'll charge you extra expense because you took it faster. The fund is like, you keep it longer, keep it with me for more period of time, because why? He can get more returns. If he makes my 100 rupees 200 rupees, then for him that percentage of commission that he takes is higher for him rather than this, and he wants me to keep that money for longer so he can play with that money across. Okay, now it all depends. Now if you look at other funds, for example passively managed funds like index funds or ETFs, right, which again, don't worry, I will do a video for this. They have lower expense ratios because they're not actively managed. एक बार कर दिया तो छोड़ दिया, because index funds move according to the index. So the indexes are Sensex and Nifty. So that is why. So again, I will go through all of this in detail. This first video is just to understand what it is, just to understand how this works. Okay. Let me go to another video. So here, the important things before you start investing in a mutual fund is to set up a goal. Okay, set an investing goal, identify your risk profile कि मैं कितना risk ले सकता हूँ, because there are so many mutual funds that are less risky, very risky also, and I will show you how to do that. Then finding out the right mutual fund for you to pick. Okay, find out asset allocation. So I'll talk about asset allocation as well. Asset allocation basically means this mutual fund किधर किधर पैसा डाल रहा है. Okay, you need to, and whether you want to invest in long term in a SIP, or you want to do a lump sum investment as well. So all of these different things are there. If you want to know where all the mutual funds are, you can go to moneycontrol.com. There's a lot of websites, but you can go to moneycontrol.com as well. Go to mutual funds and click on mutual funds. Now, when you click on mutual funds, you will come to a page like this. Now, it is so complicated. Okay, if I come to a page like this, I don't know what is good and what is bad. Do you know what is good and what is bad? I don't know what is good, because there are so many: equity focused, debt long term, debt short term, hybrid, tax saving. These are the ALSs ones. Okay, then there is G, there is D. Okay, there is so many different things as well here. Okay, so a lot of people do get confused. Okay, top performing categories, indices performance, etc., etc. How do you want to invest? So don't worry, I'm going to talk about all of this. If you want to see how many funds are there, right? Let me see if I can find that tab. Yeah, look at this. Okay, these are not the these are the funds there across. Okay, but leave this. Let me open fund category. Look at this. These are the different type of funds that are there right now. In equity fund, there is multi-cap, small cap, contra, focused, ELS, large cap, dividend, value, flexi cap, sectoral, mid cap, large cap and mid cap, Q. Okay, then hybrid, aggressive hybrid, equity savings, conservative hybrid. Okay, dynamic, balanced advantage, multi-asset allocation, fixed maturity plan. This is all in hybrid, okay, which is a mix of equity and debt. Now there's debt funds, long duration, short duration, low duration, short duration, medium duration, medium to long. This is what I said. When you introduce a new financial element or a new financial instrument in the market, people go little mad. Okay, they're like, अच्छा इसके साथ मैं ये भी कर सकता हूँ, इसके साथ मैं वो भी कर सकता हूँ, and they go little too crazy, right? Then there is something like ultra short fund. There is overnight fund that you would have seen in Zerodha, right? Then there is solution oriented, children fund, retirement fund, investment come insurance fund, and then we have fund of funds, which is the most funny thing I've seen. This is a fund which buys other funds. Okay, and then finally we have index and ETFs, which I will come to. Now, even if I just do this, okay, sorry, I've selected all the others. Okay, let me just select all and show you something. Right, even if you do this, you'll be like, Shashank, there are so many things to look at. Look at the number of funds that are there. I don't know what is good and I don't know what is bad. Don't worry, next episode we'll start taking all of this and clearing out all your doubts one by one. Okay, now another interesting fact which I saw on the news today, right? April 8th, I was doing this video, so you see the news today. A lot of people, okay, investors who are investing in the bond market are leaving the bond market, coming back to equity mutual fund market. Why? Because the mutual funds are now giving a lot of returns. So everyone's running back and coming to mutual funds, especially ELSs, obviously, because end of the financial year, a lot of people are investing in ELSs, 1.5 lakhs, so milta hi hai aise, but a lot of SIP accounts are also coming, increased to 3.72 crores. So a lot of SIP is coming in, and SIP is very good, okay, for mutual fund houses, because SIP gives them a lot of revenue. Okay, so this is why it is super important. Cool. Now, again, guys, this is just an introduction video. I'm not trying to get too deep into it. I'm just trying to make you understand what a mutual fund is, so you guys don't get confused. Okay, but in the subsequent videos, in the next few videos, I'm going to slowly explain everything in the way I explain, which is a very easy, simplified format. And I will clear all your doubts that you have on the different type of funds that you have as well. And slowly but surely, I'm going to put out videos on mutual fund, ETFs, stock market bhi dal raha hu. So you will actually get all-round experience on everything. Okay, so again, I hope you guys liked it. I hope you guys enjoyed this video. If you did like it, again, like. Okay, I don't like saying like, share, subscribe, because that's what everyone does, and I don't do what everyone does. But you can like the video. I like only the likes. Okay, and again, keep commenting what you want in the next video, because see, I saw this comment saying, a lot of people saying, please do mutual funds. That is why I've done this. So only when you tell me something, I understand it, and I come and try to teach you as much as possible. Okay, see you guys. Bye. Have a great weekend. Okay.